President Trump's economic team is set to arrive in Beijing tomorrow to hash out trade issues with their Chinese counterparts. The president tweeting this ahead of the trip, quote, delegation headed to China to begin talks on the massive trade deficit that has been created with our country. Very much like North Korea, this should have been fixed years ago. Not now. Same with other countries and NAFTA, but it will all get done. Great potential for USA. That from the president this morning. And joining me right now to weigh in on all of that is the founder and chief investment officer of Hayman Capital Management, Kyle Bass. Kyle, it's good to see you again. Thanks so much for joining us this morning.
Good to see you too, Maria. How are you?
I'm good. You've been investing and you have studied China and Hong Kong for a long time. Give us your expectations for these trade talks.
You know, what President Trump and his team are doing is something that really should have been done a long time ago. I agree with his assessment. You know, our kind of open door policy with China began with Nixon and Kissinger, accelerated under Reagan and Clinton, and even through Bush and Obama. So this is a nonpartisan argument that our country has to tackle. We're transferring, you know, $450 billion plus of our wealth to China every year. And we just need to level the playing field. And what's going on over there between IP theft and deceptive trade has to be stopped. And I applaud his efforts.
Yeah, I mean, this is an important story, and I feel like everybody gets this because we know that China has been stealing intellectual property for years. And the other thing they're doing, Kyle, is they're transferring the technology. They're involved in about 10% of venture capital deals. So they invest in these companies that have these innovations in AI and robotics, and then they just transfer the technology to Chinese companies and ultimately beat us at our own game. That's one of the reasons you were against a Broadcom-Qualcomm deal, because these companies are the underlying underpinnings of a lot of important technology in the United States. Isn't that right?
That's right. You know, China plays a very long game. While we play daily, weekly, quarterly games, they play games over decades and even centuries. And I think that we have to start thinking a little bit more strategically. You know, I see this morning where Apple's Tim Cook is saying, I'm very optimistic about the China-U.S. trade relations. Well, of course he is. He hopes to sell a lot more iPhones in China. But Tim Cook's not in charge of our national security. He's definitely not in charge of our trade policy. And so you have these bifurcations happening between, you say, business heads and people that run our country. And I think people have to understand that these agreements are not all purely based on economics and earnings per share. These agreements are about our security in the long run. And I think the press narrative is a hard one to tell if you're in the Trump administration. I think the narrative's starting to emerge that this isn't all about getting an economist on the line and saying, well, is this good or bad for our economy? Well, something that could be good for our economy on the front end, but giving away all of our technology and our intellectual property on the back end is terrible.
Yeah.
And we're starting to realize this. And look, the Chinese are starting to play games in Silicon Valley, whereby they're starting to invest through Chinese state-owned VCs in U.S. technology companies just to block those companies' ability to sell their wares to the U.S. government.
Wow.
I mean, they're playing such an incredible offense that hopefully our defense and intelligence agencies, you know, let's say, start to move forward on this. And I feel like we are finally moving in the right direction.
Yeah, which is why I know you weren't so worried, and like many other people whose head was on fire about the aluminum and steel tariffs. You said, look, you know, the bigger issue is China, and that's what we need to get to. What are your thoughts about markets, broader markets here, and the fact that markets get really roiled when we start thinking or there's a suggestion that there would be issues around trade?
You know, I think if you look at the market's reactions to the various impositions of tariffs by the Trump administration, how long have they lasted? They've lasted 2 or 3 days, 2 or 3 trading days, and then the market forgets about it and the market comes back up. You know, when you look at global GDP, you look at the growth in the emerging markets, look at growth in emerging Asia, everything looks fine today. You know, the 800-pound gorilla in the room is the construct of China's credit markets. You know, they're approaching $50 trillion worth
wow.
of bank assets on a GDP of 12. So the real risk to the world is China finally having its comeuppance in its banking sector. I find it I find it comical that China is now opening itself to further foreign investment in their banks. Of course, you think about the spider saying that to the fly. Once they've ruined their credit system, of course they'll invite overseas dollars.
Yeah, good point. What's your take on allocating capital today? Your big clients, institutional clients, fund of funds. How are you allocating capital for them right now?
From my perspective, there are a few bright spots in the world, and I think Southern Europe is finally coming out of kind of the European crisis that of course, Europe entered shortly after our financial crisis. And, we've spent a lot of time focusing on Greece, so we have a lot of our assets allocated to Greece because they've essentially gone through a Great Depression for 8 years. So there are bright spots in the world. The places where I think we all need to be focused on is our trade relations with China, the summit with Kim Jong-un, and I think something that's undercovered in the media is July 1st, we're going to have a Mexican election. And, you have a guy coming in that is leading in the polls, AMLO or Lopez Obrador, that has compared Mandela to Castro to Mandela, and he's somewhere between Castro and Chavez. I mean, AMLO
Wow.
is a complete nut job,
Yep.
and I think he's going to win the election in Mexico in July. So when we start talking about renegotiating NAFTA, NAFTA is a complete ball in the air in the next 2 or 3 months. And I think that's a real risk to, of course, I'm in Texas, so our trade negotiations or trade relationships with Mexico are something that people really need to be focused on. And maybe being careful allocating money to Latin America at the current moment.
That's a good point, which is why the president wants to get a new NAFTA deal in place within the next 2 weeks. Actually, from what I'm hearing, we actually could see that if we were to get this new deal in place before the elections, July 1. Let me ask you about Tesla. They're reporting after the close tonight. A lot of negative headlines on the company recently, Kyle, that they burn more cash than they do fuel.
So let me first state by saying that I love the product. We've invested in 2 of them, and they're a lot of fun to drive. And I think Elon Musk is a visionary.
Yes.
If one is to be pragmatic and just deeply analytical about Tesla's balance sheet, I have no idea how the statement that he made recently publicly could possibly be true. Meaning they don't need to raise capital this year. I think that statement's going to prove to be false. I think that if they're serious about rolling out the big truck and the Tesla Roadster,
right.
That they're going to need to raise $2 or $3 billion this year. And then the question is, what did Elon Musk say publicly, and is that a securities law violation? Well,
Wow.
I guess we'll see sometime in 2018.
All right, we'll be watching that. Kyle, it's great to see you. We'll see you Friday.
Thank you.
Kyle Bass.